Senator from Connecticut.
Mr. President, we are considering today a joint Senate Resolution 28 that sounds highly technical, complex, difficult to understand, and some may consider it so, but in fact, it would have the very simple, straightforward effect of undoing a rule that is vital to protecting consumers. It would undo the Consumer Financial Protection Bureau's larger participants rule under the Congressional Review Act. I think most people by now know about the CFPB, Consumer Financial Protection Bureau, which is in effect the top cop on the beat of reviewing big banks' activity to prevent consumers from being cheated, scammed, defrauded. And it's under attack by the Trump administration and, of all people, surprise, Elon Musk. Elon Musk's attack on this rule is not coincidental, as I will explain in just a couple of minutes. But to add insult to injury, our Republican colleagues are forcing a vote on this CRA to overturn CFPB's larger participation rule, which protects consumers as big tech companies rush into offering financial services. The big tech companies are getting into this business. Why? Because that's where the money is. This rulemaking allows the CFPB to supervise larger non-bank companies that offer digital payment services, including peer-to-peer apps like Venmo or Cash App. Again, sounds complicated, but really at its core, it is very simple. It means that the CFPB can protect consumers on Venmo and other apps the same way they do with banks. That's what the rule enables them to do. You're not a big bank, but consumers can still be protected if you fail in your duty to them. It's a common sense measure to deter misconduct and protect consumers. If this CRA attempt is successful, it will undermine the CFPB's efforts to crack down on peer-to-peer fraud, apps which are misused or abused. And that fraud has surged in recent years. To make it real, let me just tell you about my experience as chair of the Senate Permanent Subcommittee on Investigation. I opened an inquiry into handling of scams and fraud on Zelle. Our investigation found that the level of reimbursement for fraud has dropped precipitously in the last 5 years from 62% to 38%. What does that mean? Reimbursement for fraud has diminished hugely in the last 5 years, even though the rate of fraud has probably increased. In other words, peer-to-peer companies like Zelle are not returning money. They are supposed to be giving back to people who are scammed on their app. Not only are consumers who have already been harmed by fraud and scams on peer-to-peer payment platforms not seeing relief, by rolling back the larger participants rule, the Trump administration is effectively telling tech companies that want to offer payments, do whatever you want. Floor is yours. No one will be watching you. No one will be enforcing reimbursements if you permit fraud on your platform. Now, just so everyone understands, requiring reimbursements provides a pretty strong incentive for any platform to police and prevent fraud. That's the reason why reimbursements are important in a more general sense. Obviously, they're important to somebody who's been defrauded. They want their money back. But the requirement that the platform provide reimbursements is a very strong and persuasive deterrent to lax and lackadaisical oversight by the platform itself. These platforms are speedy, they're quick, they're easy. And it becomes speedy, quick, and easy to lose your money. And most of the payments are irreversible. People watching at home may be wondering why Republicans are spending their time trying to roll back a common sense rule that will empower CFPB to protect everyday consumers from scams. Well, like I was saying a little bit earlier, you don't have to look very far for the answer. As with a good part of the havoc wreaked by this administration in the last month, follow the money, it leads to Elon Musk. In January, Musk announced that he is partnering with Visa to launch X Money, a new venture that would provide X users with access to a mobile wallet and the ability to make peer-to-peer payments. So this new service, provided by X, would be, in fact, potentially subject to this rule and requirements for reimbursement that, of course, would check laxity of oversight and force the kind of responsibility. It's really responsibility to consumers that these peer-to-peer platforms owe them morally. It ought to be a legal obligation, not just a moral one. The value of X has dropped dramatically. Another surprise, since Musk purchased it 2 years ago, with Fidelity estimating the value has declined by nearly 80%. And now, seemingly, Musk is desperate to turn a profit on his investment in X. The CFPB, which Musk has attacked, and now the administration is moving to shut down, will be one of X Money's regulators. In fact, its key regulator. So given the spike in scams, bots, and hate speech on X since Musk purchased the site, one can only imagine how prevalent scams are likely to be on X Money, especially with a diminished or no CFPB to regulate it. I know regulation's becoming a dirty word, but think of it as protecting consumers, preventing fraud that may be irreparable when it occurs, because consumers can't get their money back. The larger participants rule, if it is not repealed, would authorize the CFPB to examine X Money's books and records and look for illegal practices. CFPB would be at X's door asking for those records, overseeing their transactions, protecting consumers. No wonder Elon Musk doesn't like it. He's averse to transparency and disclosure as a matter of principle, and that's why he is trying to make regulation a dirty word. Hence, while Elon Musk continues to ride roughshod over the CFPB, Senate Republicans are doing his bidding today. They're attempting to overturn the rule he doesn't like because it would require more disclosure, more transparency, more responsibility, legally as well as morally, from X Money, his company. So when you come right down to it, seems more simple than even I thought at the beginning of my talk here today. CFPB, through rulemaking like the larger participants rule, protects consumers from fraud, scams, and financial abuse. Every attack on the CFPB, we've seen a lot of them, including this one, the CRA, is an attack on common sense consumer protection. It's designed to benefit wealthy and well-connected, like Elon Musk, at the expense of everyday Americans. It takes away a protection to benefit Musk, who's already a multi-billionaire, and X money, and X, and it's at the expense of us, everyday American. I urge my colleagues today to vote against this attack on the CFPB and to vote no on Senate Resolution 28. Again, it may seem complicated. Before I came to the floor today, I was meeting with some media executives, people extremely knowledgeable, financially astute, involved in major American corporations. And I told them I was coming to the floor of the United States Senate to talk about the CFPB and the larger participants rule, and they looked at me as though I were from outer space. Americans are unaware, and they will be unaware until X money starts hosting scams, frauds, bots, and they're cheated or defrauded. And then they will wonder, why is there no protection? Why aren't you doing something? They will say to us in the United States Senate. And I hope they will hold accountable my Republican colleagues, anyone who supports this CRA, because it will dramatically reduce the enforcement power of the CFPB, anyone else, to help protect consumers from those frauds and loss of money, which they need now more than ever. Thank you, Mr. President. I yield the